Hi, Piyus. How are you doing today?
Good, Julien. How are you?
I'm good, thank you. Hi to all our viewers for this market stat for the month of June 2025 for the residential real estate market here in Vancouver, BC, Canada. Interesting times. So we're going to do it as we do it the usual way. I'm going to be talking about uh, supply, demand, and price evolution, and see where it all stands, and then you will take it away and talk about the rates.
Talk about the rates, the trends that we're seeing on the mortgage side of things.
Perfect, perfect. So from the past couple of podcasts that we've done, I've heard some feedbacks, and the one was that it was maybe a bit too long. So let's get going, go right to the point. And also, I will show you at the end a chart that I created to kind of show what's the actual state of the market and price evolution, where it's at. All right, very good. Okay, off we go. Here we are, removing that beautiful aerial shot of Vancouver skyline with the Lions Gates Bridge, Stanley Park. Isn't it beautiful? Favorite city in the world, Vancouver. I will tell you. Okay, here we are. So let's talk about the inventory. Here we go. Inventory. We're on the same trend as last month, where it keeps shooting up. So now we are ultimately crushing the previous high of 2019 September, and we are going to similar levels of June 2015. So let's go. If we got to break that all-time high here, when was it? 2009, 1760, 633. We're on the way, my man. We are on the way.
Yeah.
Yeah. We've been complaining about a lack of inventory for the past couple of years, which were driving the prices up in the region. And now that inventory is building up. Why is that, Piyush?
Because buyers are not making a move.
So what group of buyers are we talking about?
First-time home buyers.
You think they are not making a move?
They not as much as they should be, considering how much inventory there is. The rates are good, so you would think the first-time buyers would be out there. There's the smarter ones are like I have a bunch of deals on hand right now for purchases, all first-time home buyers. A lot of them are folks who had actually purchased pre-sales a few years ago and they're coming to close, but very few who are actual first-time home buyers without a pre-sale attached to it.
So just for the viewers to be clear, the stats that we are viewing do not include or most of the pre-sales, okay? Because the stats we're talking about are actually about the MLS, and usually pre-sales do not show on the MLS. Developers, to the extent they don't need to, they will not. So those stats are actually about pre-sale. And I love this comment because I disagree. And I will show you. I can show you right now. I can show you right now. You know, I was keeping it for the end, but hey, why wait? Okay. So here we go. I posted this chart on LinkedIn a couple of days ago, reflecting kind of on a quick visual the activity for the month of June for pending deal, meaning firm sale. Okay, so we remove subject, deposit is in the trust account, and we're waiting for completion, kind of idea. Okay, so that each dot is a sale, and on the horizontal axis you will have the price, sales price, and then on the vertical one you have this zero here, and that 0% is the asset value. And I thought it was quite interesting because asset value is the fair market value of a property as of July 1st of the previous year. Okay.
That's the BC assessment.
Yeah. So why assessed value and not list price? Because there is no ground to list price. No ground, zero. Okay. As opposed to assessed value, okay, it's not, no property sells at assessed value. Actually, few are over here, right? But it's very few. It's just a little, I call it a lighthouse in the night of the ocean. You know what I mean? Like you're navigating and you have this little light. You say, okay, the shore is over there. But that's about it, right? It gives you a little, guideline, but it does. And looking at this chart again, it's all over the map. Okay, even though it's patchy. So the one we're looking at right now is for detached. So let's go for attached. It's right there. All right. So the patch. So basically, the activity is right there. Okay, it's right there. You agree with me?
Mm-hmm.
Everything, yep. Most of it is below 1 million. Okay, yep. And actually, I did a ratio. It's 70%. 70% of the sale happened here below the assessed value. All right. Yeah. So, and it's just for Vancouver. We're not talking Greater Vancouver. There's no Burnaby. There's no Richmond. Nothing. Vancouver. All right. So this patch here, to the best of my understanding, is demonstrating that that's the bulk of the market. You agree with me?
Yeah.
And those people are the first-time home buyer.
They are, you saying?
They are, because those properties are, let's say, 800,000 and less, which is your entry level, right?
Yeah. Mm-hmm.
So they are the ones actually making moves. So when you say, if we go back, to the chart of, making the comment of, okay, so now if we actually go back here, and now that we talked about the inventory, if we look at the amount of sales, so yes, we're still dipping. Oh my goodness. No, we have horrific volumes. And ultimately we have a segment of potential buyers that are not buying anymore. And you, from your opinion, are the first time home buyer. In my opinion, they are the ones making the moves. In my opinion, the investors are gone.
For a lot of them, but I've seen that in person, so that's the reason I said it. Because I've been doing open houses with a bunch of realtors on the weekends, and a lot of people that are coming through happen to be more investors. Because I talk to them like, "Hey, is this for you? Or for investment purposes?" So investors are still out there hunting, but for the buyers, it's been, from what I have seen, not too many. So this definitely, I mean, your stat definitely proves what I'm saying wrong, but I'm telling you from what I saw on the ground.
Well, that's the fact that there are still some investors, but I think for the particular case of Vancouver, was it in Vancouver?
One was in New Westminster, and that property, we did an open house on Sunday, and then on by Wednesday it had an accepted offer, and that was the first, and that was purchased by an investor, all cash. Then there's another property I did was in Richmond, and that one's still in the market, but majority of the people who came through, they were investors. There was 2 sets of first-time home buyers, and so one of the things that first-time home buyers are doing, which they should, because of the amount of inventory that's available, they are taking their time. They're not hasty, so they do tend to shop around a bit more at the moment.
Yeah, I mean that's completely fair.
Yeah,
given
as they should, considering the situation.
Yeah, knowing what we know.
Yeah,
that's the, like, when you have a larger pool of properties you can choose from.
Yeah.
And then with all the details that we know are associated to each property, particularly in strata health, in terms of maintenance, repairs, and finances. Yeah, it's a great time, to the extent that you have the borrowing capacity. It's a great time to be a buyer. great time to be a buyer, because as reflected here,
Yeah.
was going
And
back.
something you can also talk about is, how well a property is priced. That can also be a factor in how much a buyer's motivated to put in an offer. Because like I've seen beautiful condos that are outside of Vancouver, but you know it's been listed at the same price for the last 3 months, hasn't moved. The market has spoken.
Well,
Right.
right now, this chart is telling us that, okay, some properties are selling above asset value. So, and some are actually going like as much as 40% above asset value, but some are selling. The bulk is right here. So 70% of properties sold below asset value.
Yeah.
Right. So buyers right now, they need. That's the thing, right? Like, we're not talking about investors and stuff. Like, we're talking about people looking for homes, shelter. Okay. And they need, like, okay, rental prices have been coming down.
Yep.
So for investors, also, like, something to be aware of, the laws here are pretty pro tenants. So a lot of, mom and pop, buying a investment property for, their old age, their retirement, or, as a passive income potential, they are looking at other types of investments. Okay. So the buyers that are out there making moves, not all of them, but for the most part, from what that chart is telling us, they need to sense that there is a deal. There's a deal. So sellers, it's a new dynamic for the market in Vancouver compared to the past 20 years, where the market has been pretty much on the side of the sellers, of people on title. Okay.
Yeah.
So now, I want to add something to this chart, because once I do the average, okay, once I do the average of the sold price and the evolution of it compared to the asset value, the difference was about 1.5%. It's minus 1.5%.
Okay.
So even though here we have this bulk of properties selling below SS, like the price, and that is basically the link to my next chart, which is evolution of price. Like the price is not like on an, so this one is the median sales price is not budging much. I mean, we're still in a upper part of the chart. Like there is no decompression whatsoever. So even though that chart is saying, okay, prices are happening all over the place, the median sales price is still holding as of a line. Like this one is a more detailed. That's for detached in Vancouver. Okay, so the market is happening pretty much in the 1.5 to 3-ish, right? And mostly under asset value again. But then if we go to here, that includes actually both detached and attached, right? But the price as of now on a median sales price approach, they're not necessarily moving. But when we look in details, it's happening like 70% of sales are happening below asset value. So buyers are ones making the moves are, people with a need, first-time home buyer, and they need to sense for the most part that they're making not a mistake by purchasing the property. Would you agree? So are the rates supporting this?
Yeah. So that is part of the reason why people are making moves. Rates right now are reasonable. The quality of buyers that are out there right now do tend to be better, at least the ones that I have seen that have come through. And for them, I'm able to negotiate pretty good rates. And because one of the other things that the banks are looking at right now is liquidity. Even after client puts down whatever down payment they're going to put down, um, if they have enough assets in the bank account, I'm able to use that as leverage and justify getting them a better rate or even a higher loan. So all those factors are playing into people being successful in buying at the moment.
So in your industry, the mortgage industry, so you, like myself, I just deal with borrowers at the time of their purchase, but you deal with them at different cycles of their ownership because they need to refinance. And the word is right now that in the lending sphere that there's a lot of mortgages that are coming for renewal.
Yep.
Right. So given the actual resale market, pre-sale market, kind of like access to right-in land, that is because of the volume that we just witnessed are pretty low, are lenders kind of like more angry to basically offer incentive, better rates, because there is that segment of the market that is with that much, not that much volumes, so that they're like, okay, we need some business and we need to be offer deals to our potential clients.
That's correct. So there is a lot of competition in the market, and we're able to, play the game and pit one against the other, and get the client a better rate. But there's many other things, like you said. There are other things that also play into it. Are there cashback offers? Is the lender offering the client a large unsecured line of credit, or there's credit cards with big balance, points balance offered with it. So there are many other incentives that are available for clients, and we as brokers, we have access to those banks who offer them, and we present to the client. And typically, if a client were to take a package deal like that, they're actually able to negotiate a better rate. And
Okay,
that's what
so
we do.
if you can go through the different rates that are in place right now and where they're going, that would be great.
So with that, it's subjective. Like I said, it can go from client to client. So for example,
Do you want to share your screen and show where the rates are right now?
yes. So I'll show you where the bond yield is at right now. I'll do it that
So
way.
which rates are you going to talk about? Like the overnight, the prime?
Just going to talk about the bond. So as from, because there hasn't been a Bank of Canada meeting since the last time we did our last podcast. So the prime is still the same.
495.
Yes, sir. It's a good number.
Why?
Everything kind of because it's been making sense. That's
Okay.
the best way I'll say it. Oh, you disappeared.
I'm here.
Okay. Yeah. So the reason I say that is because before the prime rate was too high, and qualification got a little bit tougher because of it.
Okay.
Prime rate being high, it also pushes up because of that. All the other rates are high as well, because there's the contract rate is what the bank is offering you. Qualification rate is contract plus 2% or 5.25, whichever is higher.
Okay. So contract plus 2 or 5.25.
5.25.
So that's the one kind of including the stress test.
Yeah, so that's the stress test. When I say the qualification rate, I mean the stress test.
All right.
So yeah, so with now the prime becoming lower, so the rates are coming down lower. So I'm using contract plus 2. It's a bit more reasonable, even though we're not down lower to where I can use 5.25.
1 second. So when you say contract plus 2,
Yes.
what do you mean?
So if I've given you the bank offer, the contract offer, I'm
So
giving you an
prime.
offer.
We start from the prime.
No. So okay. So prime is 4.95. That's
Okay.
the prime rate.
Yeah.
What a contract rate is if your rate is 4.3, for example.
Okay.
Qualification has to be 4.3 plus 2. The stress test, I mean.
Okay. So 6.3.
6.3. Before, the rates before were like, we were in the 5s or in the 6s. I've even done that. So qualification rate was that plus 2.
All right.
Okay.
So
And then if you were in
ultimately,
a variable, then it's prime plus 2 or same situation. A variable was higher before because the prime rate was higher before. That's what I'm trying to say here.
so the primary is so I must confess that over the years getting experience, obviously focusing on my specialty, which is real estate, and being exposed on a regular basis to the mortgage side of it. I must say, like, this industry is a lot more complicated than the type of lending sphere I've been exposed to, particularly in France, country where I'm from, where like, okay, you're gonna be exposed to a couple of choices for you to choose from. You know what I mean? Like amortization length, or but ultimately everything is for the most part streamlined, right? And I find that here in Canada, like there are so many buttons. You know what I mean? It's like, okay, you're going for what is the term? Are you going for fixed, variable? Like, what's your situation? And then you have access to
25-year, 30-year amortization.
you have access to so many lenders, and each have their own specificities and little incentives and little
Exactly.
things. I'm like, whoa.
Yeah.
So right now, prime is at 495. Do you see prime going down in the next 6 months, kind of thing? Oh no.
Yes. So that's a perfect segue into the next slide. But before we do that, I'll talk about the 5-year Canada bond yield. So this is within the last 5 days. We see a stability in the market. It seems there's not too much movement, even though the movements you are seeing those are the daily ones, the minor ones.
Yeah. Can you show 3 months, please?
Yep, that was going to be my next one. So that's your 3-month right here. So we saw a little bit of dip right here happen at the end of June, and we did get better rates. As soon as the rates kind of stabilize and the banks update. So there was most banks dropped their fixed rates by 10 bips, and right now the best discounts are at 3-year fixed rates. Or if you want a variable, then you have to take a 5-year variable. The banks do not want you to be taking a 5-year fixed mortgage at the moment.
Really?
Yeah.
Stop me if I'm wrong. I love this conversation. But to the best of my understanding, the 5-year fixed is Canadians' favorite go-to rate. Correct?
Yeah.
Okay, cool. All right.
Yeah. And that is everybody's favorite rate, but like as I've mentioned in the previous podcasts, most people break their mortgage somewhere on the 3-year rate. So that's why it's actually, if you're going to, or if there's a higher chance of you of selling your home that you're at, a 3-year rate is the better rate for you, because 3 years it's much more. If you were to break that, it costs you less.
Okay.
Because if you break it 2 years in, there's only one year left on your contract. Versus a 5-year contract, if you break it 2 year in, there's 3 years left, then they charge you the higher off the interest rate differential or the 3 months interest penalty. So those are the other variables you have to think about in Canada. when you're looking at mortgages as well. Are you going to be in that home for the duration that you are locking yourself in a contract for, especially when you're getting in a fixed contract? With a variable contract, you can break it, even if it's a 5-year variable, you can break it anytime you want. The most they'll ever charge you is a 3 months interest penalty. They can't charge you anything more than that.
Okay.
Okay.
So
So now, yeah, go ahead.
just looking at the evolution of the 5-year bond rate over the last 3 months, the range has been pretty much around 2.75 and 3, right?
Yeah.
Not
That's
so
correct.
volatile.
That's correct.
Okay.
So that's why we've seen a stability in rates. So the rates have been kind of hanging around where they are. Just been that little dip right here that happened in June. But then we see the rate going up in July. But the banks have not raised their fixed rates yet. So that dip that happened on June 30th, based on that, the rate sheets that I have, those rates are still continuing. But and then we can take a look at the 6-month rate, and this is what I was talking to you about earlier. Look at this, back here in April,
Yeah.
right? The rates were so low.
Yeah.
Where were the buyers? Where were the buyers?
Lack of confidence in the market. Lack of, April, we're still coming out of that end of February tariff thing, global.
The whole tariff shock happened over there. Rates are
and
down.
I don't blame buyers or anybody for that matter, considering committing to significant purchase
Exactly.
because of the uncertainty. So that's where they were. And interestingly enough, do you think that this dip is a response of the lack of activity, hoping to get some more incentive to generate business?
So the dip is purely dictated by the bond yields in the market. Banks can certainly offer the additional products that we talked about in terms of unsecured lines of credits and those kind of incentives to get the buyers in. But these kind of things are purely financial market and driven by economy. So the next that we can talk about is where did my thing go? Sorry, a second. Okay, I will switch tabs. I'm just not so great at this. How do I switch tabs here? So
Just stop
presenting and then
stop presenting and then reopen the tab.
Okay.
Your email.
Yes, I am showing you my email on purpose. So because we have, so this is our internal, so part of a Better Way group, and this is our memo that we received, and this is what I wanted to highlight for everybody. So thing that Julien mentioned about the pressure in the economy, is that going to lead to better rates? So there's going to be short-term pain in terms of our economy going through a change. As you can see that in April, that the Canadian GDP fell. So we are technically we're in a recession, in a technical recession, because when GDP falls by three consecutive quarters, then we are
in a technical recession.
In a technical recession. So this is going
officially where we are.
Exactly. Exactly.
We are in a recession. That's it.
So
we said it. We said it. No tomatoes. It's not our fault. Okay, we just calling it as it is.
So I'll read this verbatim as we see here. So Canada's GDP fell by 0.1 in April and is estimated to have declined another 0.1 in May. So I'm sure the same thing is going to be true for June.
Okay.
Manufacturing took the biggest hit at by negative 1.5 as auto production slumped under tariff pressure. Public sector spending and consumer activity offset some of the losses, but overall momentum has clearly stalled. Many economists now expect Q2 will post outright contraction, fueling expectations that the Bank of Canada may be forced to consider further easing later this year.
Forcing. Okay, so those last few words were where it's at.
Yeah.
So can you repeat, please?
So
Force.
fueling the expectations that the Bank of Canada may be forced to consider further easing later this year, because the last two announcements, they didn't make any changes. Now, when the Q2 report comes out and it says that the economy has contracted, then Bank of Canada has to do their job. They have to make sure the economy keeps going, starts going again. So in order for them, for the economy to get going, they have to make the cost of borrowing cheaper. So they have to lower the interest rate. When they lower the interest rate, it makes it cheaper for businesses to borrow money. They get business loans. They also get mortgages because they also have assets, and it'll get consumers to start buying as well. Because when we look at the economic pie, consumers, households, they are the biggest.
Got it. So what's the Bank of Canada rate right now?
Prime rate is 4.95.
Prime rate, but the overnight rate.
Overnight rate, I will take a look, because typically the overnight rate has nothing to. Sorry, go ahead.
2.5 or 2.75.
Let me take a look. Typically, the overnight rate doesn't. I know they put it out there, but it's got. Technically, it has nothing to do with us as consumers. So 2.75.
2.75.
Yeah.
So why was I asking that question? Is like, okay, if they have to ease, like this newsletter is telling us, where are they? And what is the range of motion they can have access to? Like if things, like right now we're in a recession, if things gets not better, can they go as far as, like, I think 2.5 is the expectation?
Yeah. So if the report comes out a lot worse than we think it will be, then they might do a 0.5 drop rather than the
jumbo drop.
Yeah. So I mean, a big drop would be like a 0.75. That, because when they were raising rates, they raised rates, right? Because they were behind the curve on it.
Yeah. Okay. So let's say next meeting they're gonna drop. When is the next meeting?
The next meeting is
July 30th.
July 30th. Yeah.
Okay. So next meeting, let's say they drop it by, I think, 0.25. How is that going to affect the prime rate?
So prime rate will change from 4.95 to 4.7.
All right.
Yeah.
All right.
So for fixed rates holders, that's not going to do anything. But for variable rate holders, your rate will drop automatically by 0.25.
Okay. Interesting. So going to your comment prior than when we started the video, it was not recorded. There is this sentiment that there is a momentum being built up from potential buyers that are on the sideline because of a lack of confidence. So to the extent they are being basically seduced to lower rates, maybe the other half of 2025 will be more dynamic.
Yeah. So this is an article here from the Canadian Mortgage Trend, and it's talking about, specifically, I focused on the Vancouver part. Vancouver home sales fall 10% in June, but the board believes momentum could be building.
Okay. Okay. Well, you see, if prices tend to ease, not by a ton, but to ease a little bit, few percent, and the rate is easing as well, it's a pretty good recipe for buying property.
That's what I'm hopeful about this fall. I have a feeling towards the end of summer, beginning of fall, we're going to see a lot of activity.
So actually, and then we're gonna wrap on that. I want to share something with you because there is a seasonality in the real estate market in terms of transaction volumes. Okay, so here, let me show you. Sales right there. Okay, so we had a similar situation back in 2019. Okay, so right here. So ultimately, over here, that drop here in terms of volumes of sales is the consequence of the introduction of the stress test, okay, which ultimately shaved purchase power of borrowers by 20% overnight.
Yeah.
So sellers wanted yesterday's price, and buyers couldn't just not access that amount of money from the yesterday. So it has caused a friction in the market, and usually friction equals less volumes, and for the market to absorb that, it takes time. And that's what happened. So basically, January 1st, 2018 is when the stress test has been introduced at the federal level. And then that the absorption. Okay. So here, usually the market tends to, the season of real estate is from February till beginning of the summer, let's say May or June. I can show you here. If I do that, center. Okay. So total inventory, sales. Okay. And if I don't do it on a 12-month basis, so it makes that not so easy to understand chart. But you see, you have every year you have those little mountains. Okay. So the dipping point, the lowest point is December 31st. Okay. Christmas time, people don't necessarily want to be on the market. They have other things to do. They're traveling, they're hosting, they are, getting the presents and so on. So at the same time, the springtime is a good time because it allows for family, for instance, to basically schedule their move and potentially, get to the home by beginning of the summer, end of June or July, so they can get settled, get the kids in the new school, depending on the catchment and so on. Okay, so you see those mountains. They at the peak is, see, March. Here is May. Here is May. So we have a seasonality, except that in 2019, as you can see here, right, like it hasn't been there, okay, because of that stress test friction. But at the same time, where I'm getting at is we had over here in basically an anomaly in the season because fall time was a busy time.
Yeah.
Prior to, so then if we go back to the 12 months rolling, okay, so end of 2019 we saw volumes where traditionally it will drop. They were absorbing the stress test, and they were back to basically average levels. And then that dent right there is COVID. Okay, so market, like end of 2019, more volumes, and then the rest is history. With COVID, low rates, new housing needs, and then volumes have been blowing up, right? But to go back to your point, the fall, depending on the actual global landscape, economical landscape, Canadian and North American, could be a busy season.
Yeah.
All right. Well, I think.
On that good news.
Well, providing some insights. So very nice. Wow.
So if you're a buyer, do you want to wait till fall where everybody else is going to wait for and jump in, and then you end up paying more? Think about it.
As a buyer, you'd like me to establish some kind of strategy around it?
I think so. I think this would be the perfect time.
It's hard to. First of all, I think it's the crystal ball doesn't exist.
Yeah.
Those are things that could unfold.
Follow the hypothetical, the scenario we're setting up.
If you follow that scenario, I would definitely, as a buyer, I would definitely identify my needs. Okay, my purchase power.
Yeah.
Right, and then from there, narrow it down. Okay, so real estate is not easy, people.
Really? I thought you just buy it and just doubled.
But real estate is not easy, okay? If there is one takeaway from this 1 hour conversation, please, real estate is not easy. So once you have your needs and then you have your expectation, okay, so golden rule, the perfect property at the right price doesn't exist. Okay, so you need to fine tune. All right, so it takes time, it takes resources, energies, and experience, so that you can come up with the best find with the money that you have access to. Okay, and that takes right now there is more inventory. So what I would do is I would get serious about it, educate, or getting the information, getting the knowledge about making the right choice when it comes to location, when it comes to strata, when it comes to orientation, whichever state of the unit. Then, to the extent that something is appealing and you see yourself happy living in the property, I would make an offer with completion for the after the second meeting of the Central Bank of Canada, which will be after July.
I think it should be one in August.
Okay.
Looking at the schedule right now. Oh no, sorry. So it'll be September. So right now we have July 30th, September 17th, and October 29th.
September 17th. Okay, so here's my strategy for if you looked at it all the way, if you stay during the whole podcast, here you go, is your reward. Might translate in a lot of money for you. You secure your property at a competitive price right now, and you complete at the end of September, so you will be able to benefit to the extent that the rate will be dropping at the two times 0.25. So you secure a good price right now, and then in September you will be securing a good mortgage.
Yeah, and and that's why variable is a good option. With the variable, it automatically adjusts.
True. But we prefer fixed, right? We want to.
Yeah, if you want the stability, then that's a different situation.
There you go. All right. Well, the goal in those podcasts is to deliver value and insights and understanding and clarity. Do you think that we succeeded at it today, Piyus?
I certainly think we did.
Okay. Well, I think from there we can carry on with our day. our duty, and I will keep on folding my laundry.
It's a beautiful day out there. It's a beautiful weekend.
Well, still have to do it. Anyway, well, thank you so much, Piyus. We'll see
Thank you,
if
Julien.
what we say will unfold, what we predict will unfold in the coming month. I will see you next month.
Sounds good.
And if you have any questions to Piyus' phone number is
778-994-3099.
there you go. Phone number 604-837-1979. Text or call, best way to go. You can send me an email, but I prefer a text or call. I receive hundreds of emails a day. So just pass the noise and go to me like on my phone, my brain. Okay, there you go. Piyus, thank you so much.
Thank you, Julien.
Have a great
I will
day.
do that as well. Okay.
Take care. Bye-bye.